All right, for you new Sierra chart users, you know these drawings that we've made from our composite chart? Notice how we can select them and edit them and delete them and do all kinds of things over here. So what's really important, I think, is to go into your chart settings, advanced settings 3, and uncheck allow modification of chart drawings from other charts. We'll just do that for both of our charts here. And now we can select this drawing on this chart, but because we created it there, I cannot select it here. I can even delete all drawings from this chart on the right, and it's not going to affect anything. So that's nice when you're drawing some shorter term stuff, you got some trend lines, whatever you're doing, and then you want to get rid of that stuff, but keep your CVA levels obviously mapped over. Makes a lot of sense to me. Okay, so what happened on the day? What did we think structurally? What were some hypos we could look at and use as we came into the session? Here's the structure we were looking at. And yes, I've gone to a 6-tick TPO here. These old CVAs, they look a little weird and the levels look a little different. But if we were to go back to a 3-tick normal TPO, that's what they'd be at. So I don't change the levels. I just change the tick size so I can see the current recent days action. So if we're opening here, this is a decent value that's attached to this day. I know it was a big sell-off, but ultimately we got down there pretty quick. You could even split it if you wanted to kind of tighten up that value and have that there. That's even better, but a lot of times I will just look at where that balance area is and I'll kind of use that. And but if you want to get more precise with really locking in that value area, then make the little split like I just did there. So we've got that open inside value. We have this CVA here, which is the most recent CVA we have. And then that was coming out of these two CVAs here. And as we talked about on the Q&A session today, this was an example actually. Both of these could be merged. I wouldn't include I think it was the 22nd or something, the last day, if you did have them both merged. But if you merged this and then the day that broke and continued to merge, then you could put all those days there. So that's what I have and was using during the session today. We cut this one off, obviously, but that lower edge is something we could still use. And I saw some of you today in the room that took good trades from it. I'll just leave this here because we can still see the prior day, so we don't need the duplicate. So what happened? We open and we actually drive from the point of control up to that prior value and edge of that CVA. That is an opportunity to get short. From there, we drive down, and now we inflect with, sorry, this shouldn't be highlighted. Now we get to value area low from the prior day, kind of dip below it, pop back above it, just showing that there's some buying there and whatnot. Nothing really clean or anything to trade there. It didn't give us a good breakout pullback of that prior value low, quite frankly. Down, 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 down. Meets the next area. No real trades given. Doesn't give a return pullback of that area. But then it breaks and gives the pullback of that CVA. Heads down. Ultimately can't stay below the lowest edge of any recent balance, which would be here. And that's where we find low of day. And ultimately we stabilize. When you see a big move like this, you could be looking for, if we zoom in a little bit, you could be looking for the quick pullbacks, right? Return pullback there. You could keep a broader perspective and say, okay, we're unable to stay below this area and look for larger rotations to continue to get long with. Ultimately, the real next trade that showed up kind of according to what we're doing would be to actually get the retest and short from any of these type areas as we get what's really the first overall retest of the upper edge of that CVA. But what doesn't happen is we don't complete our law to traverse that balance area, and we break higher, and that's where either of these were places to buy. The general breakout pullback, as this market tells us it can't stay below the kind of the edge of everything, really, the most lowest recent CVA that we have in the vicinity. Can't stay below there. And then it starts getting back inside and holding, at least not breaking below the actual more recent CVA. And then from there, it actually starts to hold above that. So that's a good shift in at least short-term condition, right? It's telling us, okay, we're not able to maintain the continued bearishness of holding below prior value areas, and whatnot. And that's not happening. And now we're actually holding above one. Where might this market go from there? Well, we might revert back towards the most recent area of balance that we have, which was yesterday's second half of the day. And so that's exactly where this market rips up into. And then from there, it's choppy and really fizzles out into the close. All right, what about crude oil? Crude we did cover a bit in the Q&A, so this will be a little bit repetitive. But, early morning, we're inflecting, seeing if we're going to, be above recent CVA and whatnot. And we'll just kind of show you the whole overnight session, how that came to be, right? So as we came into the close, we're back up into prior value. And not prior value, the composite value, sorry. And then overnight, where's the overnight low and what information does it tell us? Oh, it's just the general return pullback of the CVA. We attempt to break it. This is significant. The market is going quite bullish throughout this sequence. And then as we come into the open, about an hour before the open, we start to hold back below. And again, 10 minutes before the open, we're holding back below this CVA, below the ledge from this profile, below the single prints from yesterday and whatnot and whatnot. So that's a three. It's almost like three references right here around this 4150s, right? Ledge, CVA high, and the upper end of singles, which you'd really use as this 4147 level, but you kind of average them all to where that's an important reference, and that's what we started to hold below. So we're bearish into the open, and before we can even get there, it starts to zip all the way through it, and then we go to the other side. And so now, hey, are we going to remain rotational? That's where we've been all night since we reverted there yesterday. Remember, we talked about this poor low. We know we had that poor low, though. So if we are going to break below here, I know we didn't get much of a pullback. There was only 1, 2, 3 bars on that pullback. So that was an advanced type entry. You had to be really quick if you were able to get anything like that. Or if you were short from before, that made sense. But it zips right into there. It takes out that poor low. It doesn't even stop at the CVA. It takes out the more recent 3-wide poor low that we talked about. And then it can't get back above there. And we complete the destination across this CVA, back to the poor low, back to the CVA low, back to the poor low, back to the CVA low, and then it can't hold it anymore. And we get these mini little pullbacks as we break, and then it just kind of, again, retests it again and into the close, and that's that. Really beautiful movement in crude today, especially regarding the tools that we've got in front of us here and using market profile.